Welcome back. I am Pratap here. Today is 30th October 2023. So before generating demand and supply zone reports, let us quickly look into the trades, the high liquidity zones generated in our previous report. We have three demand zones. High liquidity demand zones. We got success in all the three zones, but one need to have a special skills to understand those trades. So I'll explain about them. And also one short trade is generated, high liquidity high liquidity supply zone is generated, and the trade is not triggered today. So let's look into the demand zones triggered. The first one is Dr. Reddy. It is a high liquidity zone already tested. You might be knowing a concept called LOTL, level on top of the level. What is LOTL? If you have a demand zone just above the demand zone, maybe very minor difference, price difference between these demand zones. Let me expand to understand. See the gap between these two demand zones. It's almost negligible gap, right? So in such kind of scenario, this scenario is called LOTL. So we have one demand zone. On the top of that, we have one more demand zone. Level on top of the level. So in such kind of demand zones, we consider both together as one demand zone. Because this top one is a high liquidity demand zone, the LOTL zone, the one below this, also gets this high liquidity power. So we have to apply this entire high liquidity power inside this demand zone. This is one point you have to remember regarding the high liquidity zones. Okay. We have already fine-tuned the first demand zone. Let's go to the 75 minutes. Previously, we fine-tuned the zone at 75 minutes level. Because it's a small zone, there is only 175 minutes demand zone inside this. And previously, it was tested. Here we got a test. The prices went up and reached the intraday target previously. 75, not intraday, 75 minutes target it achieved previously. Now what happened? Because see how easily it passed through, because it is already tested. We didn't have any fresh 75 minutes zone inside this, the first demand zone. And look into the second demand zone. The actual move started from here. This is the real zone. The reason is there is a gap with a gap. We have a drop, we have a base, and then we have a rally with gap up. That's why we should give a lot of importance to this 75 minute zone. If price enters into this demand zone, the second 75 minutes demand zone, definitely it gives a good success. That is what happened today. The moment price entered into this demand zone, see the rejection. It's a huge rejection. You know how much profit it has given? The Dr. Reddy? It has given 15,500 rupees profit, which is 13% return on the investment. But everything happened in first 3 minutes trading of today. I don't know how many of you dared to trade during the first 3 minutes. Because generally I don't take trades for the first 5 minutes, sometimes even 10 minutes also. There are other reasons for me, because volatility is my major issue. So that could be one reason. And second reason is I trade in future segment. Okay, anyway, if anybody would have taken an entry in this, you would have got 15,500 rupees profit in just 3 minutes, which is 13% return. If you look into 1 minute, you will understand within the 3 minutes. Let me open 1 minute. So this is 1 minute chart. See, this is the 9:15 candle. So entry is in the 9:15 candle, and then there is a big push in the next candle, next big push, and there is a rally base drop. And next prices reaches into this zone, you can book the profit. That is one option. Our other option is you have to wait, but this is a what to say? This is another option, rally drop, but price didn't reach that area. But this itself is a very big, what to say? It is a 13% or return on the investment push. That is a huge profit during the intraday. Intraday generally our average high liquidity is 6.1%. So here itself it has given 30%. If I would have taken a trade, of course, I don't trade on the 9:15 candle, but if I just assume if I would have taken a trade, I would have exited in the next candle itself. Because that itself has given me more than 12% return on the investment in this candle. From here to here, it gave 13%. So that is the power of this zone, the 75 minutes zone. We have a rally candle with a gap, especially the rally candles with gap. They have good number of pending orders because that is a professional gap. Okay, Dr. Reddy, this is about Dr. Reddy, but everything happened in the first 3 minutes of today's trading session. I don't think, I don't know how many of you might have really dared to trade in such kind of first minute of the trading day. Okay, let's look into the next stock. The next one is Kotak Bank. To trade Kotak Bank, definitely one should have special skills. Of course, even Dr. Reddy also, if you are not aware of LOTL concept, definitely you would not have taken this trade. You might have traded both these demand zones as a separate demand zones. So let's look into Kotak Bank. See, this demand zone is, this daily demand zone is inside weekly demand zone. And moreover, this daily demand zone is a high liquidity demand zone. And see how many tests it has given. Several tests, several tests, several tests. Even it went deep. Even second time also, sorry, This is the first time, second time, third time, fourth time, fifth time, sixth time, seventh time, eighth time, or ninth time. It has given multiple tests. Even here, several tests are here. I think as per our report, it is even here. As per our report, I think it is tested some around 11 times or 17 times. I didn't remember, but okay. But when it is tested these many times, do we need to take a trade? Yes, we can take a trade if it is following our principles. But this particular stock, to accept today's trade, definitely you need to have some special skills. Whatever the concepts we learned about high liquidity zones. What is the concept we learned about high liquidity zones? We go to lower time frame. Because this is a daily time frame, we go to the lower time frame. What is the lower time frame? 75 minutes, one time frame below. If it is already a tested zone, we look for a fresh 75 minute zone. Or deep inside. Deep inside, if there is any zone, we look into that. So one of these conditions. So here, there is in the recently tested, when recently tested, that is 24th March, when it was tested, an excellent zone is formed at the 75 minutes. Inside the 75 minutes, 15 minutes level. And that zone is formed with a professional gap. Let me show you. First, let me go to the 75 minutes time frame. Why top-down analysis is important, you will understand here. Here, a fresh zone is created. That is rally, base, rally on 75 minutes. Of course, it is again tested here. While testing, on 5 minutes, sorry, 15 minutes. Let's go to the 15 minutes. Sorry, we are at 1 minute. Let me go to 15 minutes. Yeah. It should be at 5 minutes. Sorry. Mm, yeah. So we have a drop, and then we have a base, and then we have a rally candle with a gap up. See the professional gap here. Previously, it took a trade and pushed the price. Next again, you can see Second time again from this. So below this, the orders are consumed. And then the remaining pending orders in the gap allowed the price entered into this demand zone, and then again it gave a big push. So it looks like professional gap is filled, right? But there are times what happens, how institutes they will divert our attention. It look generally as a normal person, or I mean as a normal supply demand zone trader, we think okay, this professional gap is filled, but this demand zone is still valid, the 5 minutes demand zone, because it's not yet violated. Sometimes there is a possibility within this gap area they may add new orders. Just keeping that point in our mind. What is that point? Because they are adding new orders, we can't take risk in trading this. We need some confirmation. Really they are ordered or not. New orders placed in this gap. For that, the confirmation point of view, let us observe the recent price action. The recent price action will give you the close. So let us look into that gap area. That's why I have drawn a rectangular box with the look into the recent price action within this professional gap area. Prices are entering, see the rejections. Prices are entering, see the rejection. Prices are entering, see the rejections. Again, prices are entering, see the rejection. This is today. I have drawn a blue color area, blue color line here. Inside this professional gap, I drawn a blue color. From this, prices are reaching to this blue color and see the rejections. Excuse me. From this blue color, that means there is a heavy order flow in this area. See, second time, it's just about to receive this blue color, again heavy rejections from here. Again, prices entered, today it's entered a little deep inside, not deep, a little below this blue color line. That means still there are some more orders here. They might have kept all these are all new orders. It could have been a new orders, new orders. If it is not a new orders, definitely it would have been reflected in our price action on the charts. Silently kept the orders here in this area. But previous price action, what it is telling us? This gap is filled. But actually, in this gap only prices are again moving up from this gap only. That is the reason. It is a heavy order flow. That's why there is a big, see the push from this area, how prices are pushing from here. It's moving, it's a, after price entered, it's a very good push in all these scenarios. At least it is reaching this much target. Let me draw. Each time when there is a push from this area, prices are having a significant move. This is the first time, this is the second time, and this is the third time beyond this. And such kind of move. But how many of us really dare to take such kind of trade? Because we learned the concept. Instead of saying we learned the concept, I can say most of us mugged up the concept. What is that? Once it is tested, we cannot take a trade. That's it. Of course, we cannot take the trade if it is a normal zone. But these are all not normal zones. These are the zones always institutions keep on adding the new orders. That's why it is a high liquidity zone. Every zone is not a high liquidity zone. There are special zones. Institutions concentrate only on those zones. Again and again they concentrate. Such kind of zone. So when you are identifying, you need to observe. You are just applying only the demand and supply zone concept. We never get success. Demand and supply zone is a price action based concept. So you need to apply other price action clues into these zones. One powerful concept is rejections. Why I added a rejection column in our NeoStock supply demand zone report? Look into the reports I am publishing every day. You have a column rejection. The reason why I added the column rejection is because that column will give us these clues, this kind of clue. Rejection is one of the powerful concept, rejection, that will give an idea where the actual order flow is available in that zone. The real order flow. Rejections always indicates the real order flow. Especially heavy order flow. When there is a heavy order flow, then only price rejection will come. Otherwise, it is not possible. See how the rejection came from the moment. This is the first time entered into this blue color line area price. Powerful rejection. Based on this only, I have drawn this. Second time, see the push. Third time, that is today, see the push again. There is a big push today. Then again prices came and again just below this, that area. Again it gave another entry. This is 9:15 candle. Okay, 9:15 candle, we don't take a trade. I agree. But we got an opportunity at 9:45. And this is the target. Based on the 15 minutes, because this is our intraday. Generally, intraday we use 5 minutes to 5 minutes. But the reason why we are taking 15 minutes target is our high liquidity zones are giving such a great push to the price. Most of our trades are having reaching the 15 minutes zones during the intraday. That is the reason why 15 minutes always I am focusing for identifying this target. One advantage in selecting 15 minutes, we get a very good reward. If it is a 15 minutes, we will exit very early. But our high liquidity zones are having the power in such a way, it is having the capacity to push the price up to the 15 minutes zones. Suppose if the reward within the 5 minute zone is something around 1:6, 1:7, okay. Then in that scenario, you can fix to the 5 minutes as a target. When you have between 5 minutes to 5 minutes, you have a very minimal, like only return on the investment 1% or 2%. Don't accept. Go to the 15 minutes. Most of our 15 minute zones will give you between 5 to 6% intraday return on the investment targets. And every time our zones are pushing the price up to the 15 minutes. So that's why I have selected this 15 minutes as a target. At 9:45 candle, we got the entry. Of course, 9:15 candle also we got, but 9:15 mostly we don't take the trades. In that case, next again another opportunity got 9:45. See the push. 11:30 it reached the target. You know how much return it has given? 8,000 rupees, which is 6.6% return on the investment. Just little above our average return on the investment. So perfectly it worked. But the question is, who is having the day to take such kind of trades? We have to dare, you have to respect the concepts. You always, if you stick to only if it is not a fresh zone, I don't take the trade. If you think like that, we never get success. Most of the success is coming from high liquidity zones. How many trades we have seen so far for the last 1.5 month? Including these trades, we have over 40 plus trades now. How many failed? Only two trades failed. How many high liquidity zones failed during the last 1.5 month? During especially the intraday analysis related stocks. Apart from those two, there were four more high liquidity zones failed. But we didn't get losses in that. The reason is we didn't find any entry inside. We didn't find any fresh zones at lower time frame. At lower time frame. Always we look for fresh zone at lower time frame. There is no doubt in that. But this concept is different. This concept is based on the rejections. We get such kind of rejections when there is a heavy order flow. It is very, very difficult. Even price passes, very slowly it will pass. See here, the second time, it moved a little below, just like it is like some 50 paisa, something like that below. And today, maybe another 1 rupee below the previous one. How it is possible? When there is such a kind of strong order flow in this area, then only we can expect such kind of push. So in such kind of scenarios, looking for the fresh zone is meaningless. There is a concept in supply and demand zone related to the rejections. Price action clue rejections is a price action clue concept in supply and demand zone price action. If you would have learned that concept, you might be having an idea about this. When there are rejections, we don't bother about a fresh zone, even at 75 minutes level, even at 15 minutes level, even at 5 minutes level. Because all the orders they kept in that particular area, institutions. They didn't spread across the zone. They concentrated on a specific area or a very limited area. In such kind of situations, prices will come again until all the orders in that particular area is consumed. That's why I told before starting this session. To get success on these trades, you need to have a special skills. People who is having fair idea about rejections would have taken this trade. If not in 9:15 candle, at least we would have taken at 9:45 candle. Price reach and there is a push in 9:45 candle. Next 10 o'clock candle. See, it's keep on going. Hit the target. After that, it is pierced. So Kotak Bank, this target has given 8,000 rupees profit with 6.6% return on the investment. And there is one more Ramco Cement. Ramco Cement also given even much better than all these stocks. But you would have followed the concept I explained to you just a few days back. Maybe some 4 or 5 days back, I explained a concept. In that video, I told it is a very important video. In the title itself, I kept it's a very important video. The entry buffer concept. I clearly explained how to trade with entry buffers. So let's get into Ramco Cement. So let's go to the daily time frame first. Entry buffer. Previously I told you, entry buffer, when you identify entry buffer, that is possible on the first candle. This day, just before the high liquidity demand zones, you can find entry buffer. The moment you find a huge rejections from this area, we can confirm there is an entry buffer. That's why it drawn a blue color line here. See today what happened? Just reached that entry buffer area. Maybe few paisa. Previously, what was that low of this candle? 961 rupees is the low. And today, 960.75. That means 25 paisa additional price only it consumed the orders. There is a heavy order flow here. What is entry buffer? There is a huge bunch of orders just before the high liquidity zones. After consuming all these orders, when prices get into this 75 minutes demand zone inside this, which I already drawn, it takes time. By the time, definitely this zone will give a very good success. But before that, if you want to take a trade in this, I clearly explained how to trade by using entry buffer. If you would have taken during this intraday at 9:22, there you got this entry at 9:22 time interval, 1 minute time interval, 9:22, it reached, and then the target. Always we look for the target at 15 minutes because I already told you these high liquidity demand zones are having the capacity to push the price up to 15 minutes level. So this is the 15 minutes supply zone, which is the target. See, entry buffer when it reached at 9:22, then immediately 1, 2, 3, 4, 5, 5, 15, 15 minutes candles. That is it. If you are, I counted based on 1 minute candle. So at 10:29, it reached the target. At 10:29. So almost 1 hour. Within 1 hour, it has given 18,000 rupees 317. 18,317 rupees profit it has given, which is 12.3% return on the investment. During the intraday, 12.3% return on the investment is not a joke. Kotak Bank, 13% return on the investment. Sorry, Dr. Reddy's. Kotak Bank, 6.6% return on the investment. All these things happen from high liquidity. They are not happening from normal zones, normal demand and supply zones. Okay, whoever has taken the trades today, they are the lucky people. Entry buffer concept explained just a few days back. Okay, this is about trades from our previous report. Now let's generate the report for today's session. Today's trading session. The entry time frame is daily. Let us find the stocks which are near to the daily demand zone. So these 9 stocks are near to the daily demand zone. Any high liquidity zones here? No high liquidity zones we found near the zone. Mhm. Two times, good. Okay, I'm not advising you people look for these zones. Maybe you can look, but you should be having a understanding about confirmation trading related zones. Okay, let's go back. For entry time frame daily, let us find the stocks which are near to the daily supply zone. Any high liquidity supply zones? Bank of Baroda is there. It is a high liquidity supply zone and a fresh high liquidity supply zone. Indigo is there. Already tested 3 times. Indus Bank is pierced, so we don't focus on this. Remaining all are normal demand zones. See, it doesn't mean you should not trade in the normal demand zones. You can, because the principles works as long as you follow based on the trend, your location, and your odd enhancer score here. This is the column OE, odd enhancer score. This is out of 15 calculated all these values. But when we are looking into the high liquidity zones, we are not much giving importance to these factors. You should also look into your risk reward. High liquidity zones, we are worrying about this risk reward because we are going one time frame below and then we are fine tuning. There we are getting good risk reward while fine tuning. Okay, let's move on. For entry time frame daily, let us filter the stocks which are closed inside the daily demand zone. We have a big list. So total 41 stocks are closed inside the daily demand zone. So let's go back. Entry time frame daily. Let us find the stocks which are closed inside daily supply zone. Nifty 80 is closed inside the supply zone. Nifty reality. So total 21 stocks. So let's go back. Let us find the tested zones. Entry time frame daily. Let us find the daily demand zones. So 14 demand zones are tested today. This is the list. So let's go back. For entry time frame daily, let us find the tested daily supply zones. So these 11 stocks are tested the supply zones. And let us find the newly created zones, entry time frame daily. Let us find the stocks having the newly created demand zones. So these 6 stocks are having newly created demand zones. Let's go back, entry time frame daily. Let us find the stocks having newly created supply zones. So these 5 stocks are having newly created supply zones. So this is about the filtered list. Now I will generate demand and supply zones for all the stocks for your reference purpose. For entry time frame daily, this is the list, complete list. I'll keep on scrolling this list. Whichever the stock you want to refer, please pause the video and you can refer the stocks parameters. So this is the complete list. I hope this information is useful for your further analysis. Let us all meet again in our next video. Thank you.